Well, I would say that very strong results coming in from Tech Mahindra. In fact, it's a beat in terms of the margins. Margins are at a 6-quarter high. The net new deal win stands at $421 million. This is far higher than the $290 million in the previous quarter. Management says that they are seeing demand resurgence and supply side recovery. In terms of the overall revenues, the revenue growth in constant currency terms stands at 2.9%. This is contributed by enterprise, which has grown 4.3% on a sequential basis, and the communication vertical, which has grown by 0.8% on a sequential basis in constant currency terms. Dollar revenue growth has been higher than expected at nearly around growing by nearly around slightly around 4.8% on a sequential basis. We're also seeing that EBIT margin, which has expanded sharply on account of better efficiencies, better utilization, that is up 413 pips during the quarter. It is at a 6-quarter high. EBIT margin now stands at 14.2%. To know that this was also one of the key notable, as there has been good amount of volatility in the EBIT margins, and also this is one of the reasons why Tech Mahindra gets relatively lower valuations versus the IT peers, and we are seeing a strong EBIT margin expansion during the quarter. Management at the presser also did mention that they are the overall momentum, the overall growth momentum is likely to sustain going ahead. As a result of good revenue growth as well as strong EBIT margin, the profits have been above estimates, with the profit of 1065 crore, a growth of 9.6% on a sequential basis. The net new deal win stands at $421 million, higher than $290 million in the previous quarter. Management, in terms of the deal wins, also did mention that lots of wins are tilted to the digital technology and new age technologies, and majority of the deal wins were mid-size with TCV of around $25 to $75 million. In terms of the EBIT margin, they did mention that efficiencies have led to EBIT margin improvement, and overall they are seeing a supply side recovery and also demand resurgence in Q2, and now their digital business stands at 47% of the revenues. In terms of 5G, management mentioned that they will 5G is likely to see significant volume rollouts in 2022. They also mentioned that with regards to salary hikes, well, they did mention that junior most employees may get salary hikes in FY21, and senior most will get in calendar year 2021, and about 25 to 30% will always work from home even when things normalize. In fact, lots of other highlights also from the results. Mr. Gunani did mention that they are seeing demand revival across multiple segments as customers have accelerated their pace of digital transformation. Manoj Bhatt, who is the Chief Financial Officer, mentioned strong execution on both revenue growth and operational metrics has helped to improve the performance on all fronts, and cash conversion continues to be robust, and they remain committed to creating value for shareholders through effective capital return. In fact, if you look at the overall cash conversion, that remains very strong at 164% to the overall net profits. The attrition has come down during the quarter, 14% versus the 17% in the previous quarter. Utilization has improved. Receivables days have come down to 97 versus the 107 days in the previous quarter. Revenue growth has been broad-based across the segments. Technology, media, as well as the BFSI segment have led the revenue growth in terms of the verticals. Technology contributes nearly around 10% to the overall revenues. It has grown 13.3%. BFSI contributes 16% to the revenues. It has grown 9.6%. Communication vertical which contributes significantly 40% to the overall revenues, has grown 3.2%, and manufacturing, which again had of course seen degrowth in the last quarter, is now back in the positive territory, growing 0.5% quarter-on-quarter, and manufacturing contributes 16% to the overall revenues. Finally, retail and transport, which contributes 7.5% to the overall revenues, have grown 7.8% on a sequential basis. Across the geographies, America has done far better than Europe, I would say. In fact, America has grown 2.7% on a sequential basis, with America contributing 48% to the overall revenues. Europe, which contributes 25% to the overall revenues, has grown at 2.1% on a sequential basis, and rest of the world has grown by 11.7%. So I would say it's a broad-based performance, a very strong commentary coming in from Tech Mahindra. And do note that this stock already did hit record high in the recent weeks, just like the entire ITs, most of the IT stocks. And of course, it remains a top pick by some of the analysts, and a lot of hopes are there in terms of their 5G investments. We will want to wait and watch out for more commentary on that. But as of now, I would say Q2 has been a fairly strong quarter for Tech Mahindra.